The people had an opportunity to think about what happened yesterday, the commentary that Janet Yellen made. I think they really thought, what did she really say that was wrong? In fact, she probably said everything that needed to be said, right? That taper is coming off the table, rates are going up, you better get used to it, you better plan for it. She was very transparent, she qualified her statements, she came up with the plan, she came up with how she's going to do the plan, what she's going to look at, and so quite honestly, I think yesterday's reaction was all the automated high-frequency guys that read the headline. They think it's negative. They create sell orders. They knock the market down. There was no real participation on the downside. Volume didn't pick up. Large asset managers were very comfortable as they heard. And then today, boom, they take it right back to the high.
Penny, I thought that Janet did a fantastic job yesterday. I think she injected some much-needed reality and shook off some of the complacency in the market and prepared us for a gently rising yield environment. That said, there are still an awful lot of institutions that have money to put to work, either in the long end of the market for pension funds or in the short end where yields are a bit higher for corporate cash.
I really think that it's financials, it's banks. Let me tell you, this is like the biggest inefficiency in the market, right? If you ask me what's the strangest inefficiency, I'm going to tell you it's the financial sector of the market trading 7 or 8 times forward earnings and being the biggest beneficiary of rates rising over the next couple of years. It makes no sense to me.
It's been a very long time since the financials have led this market.
That's right.
I think that people, it's been years, right? We got a little bit of pockets of it over the last year, but we really haven't seen much of that. And I think that is giving people confidence. If we can get the financials to lead, to lend again, that's going to help the economy.
It's not just
How about big tech, though? You guys are only talking about the financials. Look at big tech. Look at the XLK. Look at how well some of these big old tech companies are trading today, and they've been exploding to the upside.
Right.
Hewlett-Packard, Intel's moving to the upside. Microsoft new highs.
Microsoft through 40.
Yeah, through $40 a share. Everybody said it was dead money. There are areas in this market that are still very cheap.
I think overall, the reality about Tim Cook is going to be his kind of legacy is largely going to be set over the next 12 months based on some of these new product categories. And so right now we're not seeing a lot, and I think we should just hold off on really making a strong call about what his legacy is going to be until we see what's going to yield over the next year. The product categories are not in our model, and to my knowledge, they're not in any of the street estimates, but it assumes that there's some optimism around those, and so it assumes that the multiple that investors pay goes up based in anticipation of these new products. So It's not in the model, but it's in our price target. I think for our March quarter, we were looking for 3 million total from China Mobile, so that's more or less spot on. It would have been nice to have seen more of an acceleration in the month of February. I think that was a February number that they had disclosed. And so, in general, I think it really speaks to it just takes time. And obviously, China is a big opportunity, like you said. And I think investors need to be patient about China Mobile, like we had to be patient with Verizon. So.